Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for what I believe to be August 5th, 2014. I'm going to show you a couple of interesting charts and then go over the indices, give a nice overview of what I think is happening in the markets. A couple of very important points. This is an extremely volatile, to say the least, at the same time, somewhat of a dangerous market that's being held hostage to technical factors, global crisis factors, primarily, and very, very nervous traders who are being whipsawed around, and that includes institutional professional traders who are being whipsawed around by very fast moving, algorithmic, high frequency trading programs that completely dominate the markets, given the fact that we are in an extremely light volume period of the summer. Now, saying all that, we're still doing okay. So, couple of rules you have to follow and make this as simple as possible. We get these big runs on stocks. You gotta take profits. Take those 80-90% off the table. Don't look for continuation of trends on an intraday basis, because like we have clearly seen, and I've shown it a zillion times, the patterns change dramatically, and what looks like a reversal candle snuffs out in a nanosecond and then looks like a running tail or going down. Prime example today. So what you got to do is you got to keep your position small, have some wide stops. If you're going to swing that particular position because you believe that it'll eventually go higher over the next couple of weeks, then obviously stay put. Add dollar cost average down a little bit, bring your costs down, don't go too heavy. Everyone's got their own risk parameters to deal with. Everyone's got their own risk tolerance, pain threshold, greed factor, pain factor, emotional volatility factor, you name it. We discuss this all day long on a real-time basis in the chat room. And you have to manage your own portfolios. MYOT, manage your own trades. You have profits, take it. No, I know. I put down broad parameters out there. I manage my own portfolio. My primary game is to trade my book. And I do this service on the side. And I put in a lot of work into it. Engage people as much as possible during the day. I don't day trade as much as I swing trade. Keep positions small. And you know what? Even the day trades can work out pretty dramatically well. Get a couple of points here and there, whether you're playing the options or whether you're doing stock, you're going to be okay. Now, saying all that, this is an extremely volatile and choppy, not necessarily very dangerous, but extremely volatile and choppy market, and you must respect it, that what looks good in the first part of the morning or for an hour will not what it looks. Will in fact be the complete opposite 15 minutes later. Prime example this afternoon. To saying all that, these are the times that traders cut their teeth, earn their stripes, get their medals of honor, whatever you want to call it. And these are the best of the best learning times, because when you can handle these type of markets, you can handle pretty much any markets going forward. I've gone through a whole bunch of markets, up cycles, down cycles, all the way from 1996 onwards. On the trading side, very actively since 1999, 2000, and honestly speaking, well, actually after 2000, it's been a great learning experience, and I'm still learning. and I'm still adapting. I do not follow the traditional legacy technical analysis BS that they keep on throwing around. Of course, those things work, but you know what? This is it, like I said in very simple terms. These algorithms, they know exactly what the traditional legacy TA CMTs are looking at. That's chartered market technician, certified market technician, whatever they call themselves. And you know what? They just go whack them all right at that level. So confirmations on a breakout don't always pan out. Confirmations on a breakdown don't pan out. So this is where I come in. I step in. I try to put a different spin on it, different variant look, variant view, as I used to call it back on StockTwits. And you know what? I try to get people to see outside the box a little bit. I'll do my best. I'll keep on trying to do my best. So let's get back to work right now. I'm going to show you something very interesting. This is a this is basically a way to kind of look at the markets in a certain way. There are different ways to read this, but the simplest way to read it is the overbought, oversold condition, and say it's never 1 + 1 = 2. Just remember that, okay? So let me just show it to you very quickly. Here we have these crossover lines here, these stochastic lines, and you know what? This is a weekly, and on the S&P, this is on the Russell, and you can see that we're not done yet. On a weekly basis, we're still going lower because these lines have to come down similar to this and then turn around. Okay, we are very oversold. You look at the RSI, you know, we're down here at 10. You know, RSI is below 30. So here, there's more room to be done on the downside, and that's for the S&P 500. And that's where I think the S&P 500, and I'll show you in the other charts, can go down another 50 points. And I've shown that before. All right. So bottom line is, we are oversold. MACDs, you know, MACDs are down here, but you know these lines need to cross up like this to have a sustained multi-week trend up. Okay, and we're not there yet. Let's look at the Russell 2000. And the Russell 2000, very simply, where's my lovely drawing tool here? Okay, there we go. On the Russell 2000, interestingly, we are almost there. You see this turn? How it turned? Well, looks like, you know, it might want to do that here. It's very deeply oversold, no question about it. These are oversold regions. You can see that. All right. And the bottom line is that we are right now also pretty close to the lower Bollinger, this purple line. Again, we could slip down and come down here and turn. It very well could happen. That's when we're looking at those, you know, 1070s, 1060s, and that stuff. Look at this. Every time it turns, you have a multi-week trend up. This being the actual indices. All right. Oversold. The histogram bars are still expanding downwards on a weekly basis. The next slide, the next video we'll look at the daily, so you'll see the difference. So the bottom line is this one needs to, you know, see how it turned, see how it turned here, see how it turned. Well, this needs to come down more. Possibly, I don't know if it's going to stop here or lower, but all I'm saying is the S&P 500 very well needs to test, you know, very well could be down in the 1840, 1850 range, because that's where it engages that red line, which is the 50-day moving average, which is at 1835 actually. So wouldn't mind that, but then at the same time, you look at the Russell 2000, we're below the 50, and we're getting there. All right. So let me move on to the dailies on this, and we'll go over it. And this is very, you know, quick for you. Many different ways to read this chart, and there is no rule book to read it. It takes time. It takes a while to kind of understand it, because a lot of the times, you know, you gotta match all these things at the same time. You know, the deep oversold MACD. You know, these lines have to be way down here. The MACD histograms down here. I'm sorry, deep oversold RSI, and then you kind of have to look at the market condition and say to yourself, okay, you know, is that the time that, you know, we go in for a, you know, big move up or a big move down? All right, let me go to the next video.